Good morning, everyone. This is Black Forest coming to you again with another pre-market analysis video for USDCAD. But before we get started to break down this currency pair, we have to state that this video is for educational purposes only. This is not financial advice, but we all know why you're here to find good financial education that can improve one's finances. So, with that being said, let's go ahead and get started. Okay, so we are still stuck in our range. That we've been stuck in this consolidation ranging period since uh, end of January. We've been stuck in our range, just bouncing between 1.277 and 1.265. Those are the two price points we've been bouncing around. Reason why this is going on is because from a fundamental standpoint, that USD, as we know, is weak due to the inflation that's going on with the American economy. And the Canadian dollar is one of our weaker currencies. This is due to the effect of the oil prices. If you want more elaboration with that and how does oil affect the Canadian dollar, you have to come and join Black Forex. This is where we give the goods. But that's what's going on with the Canadian dollar. So, from a technical analysis standpoint, every time we get to our 1.227 area, price starts to drop. And then once we start to get to this area here, 126, then price will go up. So, we will most likely stay within this range unless we have a shift in our fundamentals. So, in a shift in our fundamentals, we would look for either USD to get much more weaker than it currently is, and if that was the case, that would drive price down. We will look for CAD to become stronger. That will be contingent on what the reports on the oil will be for this week, or what its own country's economic news reports as. So we'll have to see how it is because it's not too strong. It's not the weakest of currencies, but it's definitely not one of our strongest ones. This is why we've just been bouncing between these 2 points since January. Now, let's say we do have those shift in our fundamentals, in which can push price up or push price down. Okay. What we will look for is a push up, weak pathetic temp to go down range, and then price will break above this 1.227 area. Okay. If we have the fundamental shift that will cause price to drop down, right? We will have a significant breakdown, a weak pathetic temp to go up, slight range, and then price will continue to go down 1.265. But what is most likely going to happen is we're just going to continue to bounce between these two areas. Now, you can place sales every time it gets here, and you can place buys every time it gets here. But as I've stated before, I am not a fan of trading ranges because the moment there's a change in the fundamentals, there will be a break in the range. And if you're not on the proper side of that fundamental shift, your trade is either going to hit stop losses or you'll start to go into retracement, in which there's no coming back from. Okay? So always keep that in mind and always let the chart show you the breadcrumbs before you place your position. And with that being said, happy trading.